Shalom, my name is Innocent Mapanda. I hope I find you well. It is my pleasure to have this opportunity to share with you information in line with advanced level accounting. So I would like to touch on the topic partnership dissolution. Right. So partnership dissolution refers to the termination of a partnership as well as the cessation of its various business activities. Right. Partnership can dissolve for various reasons and under many circumstances. Right. We can also refer to it as liquidation, where partners may decide to stop operating, or partners may decide to close down their business due to various reasons and circumstances. Right. So when a partnership dissolves, the partners must share profits. The partners must share gains or losses that may arise during the process, according to their profit and loss sharing ratios. Right. But if there is no partnership agreement, profits and losses are distributed equally amongst the partners. Right. Also, you must know that there are no tax consequences from dissolving a partnership. However, partners do need to account, they need to account for all properties involved in the business and whether or not they have appreciated in value over time. Right. So, before we can start this topic, before we can start the calculations, or before we can start to identify the accounts to be prepared, right, would like to see the reason behind partnership dissolution. What causes partners to liquidate their business? What causes partners to reach to the agreement of dissolving their partnership? Right. So the reasons for partnership dissolution may include one of the partner retiring or withdrawing his or her services from the partnership, or it can be due to the death of a partner. Another reason can be loss of profits or declaration of bankrupt. By bankrupt, I mean the partnership business may become insolvent. Another reason which may cause the partnership to dissolve is illegal activity or violations whereby the state or the government or the law may close down or may force the partners to close down since they are found on the wrong side of the law, selling maybe illegal products. Another reason which may cause a partnership to dissolve is the merging of a partnership with a larger entity. This may include the takeover of a partnership by a limited company. Another reason may be the partners' fulfillment of the conditions stated in the partnership agreement. For example, they might have reached the sale of a certain number of products according to their agreement, and the contract may expire after reaching the sale of certain number of products. Right. So we have various reasons which may cause a partnership to dissolve. Another reason can also include conflicts and disagreements amongst the partners. They may fight over different views and perceptions, and they decide to close due to different views and perceptions, leading to conflicts and disagreements. I hope you are following. So we've got what we call Partnership Act, which governs the distribution on final settlement. In settling accounts, between the partners after a dissolution of partnership, the following settlement rules, subject to any agreement, must be observed. Rule number 1, losses including losses and deficiencies of capital shall be paid out first from profits, next out of capital, and lastly, if necessary, by partners individually in the proportion in which they were entitled to share profits. Rule number 2, the assets of the firm, including the sums, if any, contributed by the partners to make up for losses or deficiencies of capital, shall be applied in the following manner and order. Order number 1, paying debts and liabilities of the firm to persons who are not partners therein. Rule number 2, paying to each partner ratably what is due from the firm to him for advances as distinguished from capital. Take, for example, a partner may give the partnership a loan. So it means that the loan is distinguished from the capital. And according to the order, we must pay the partner for any amount owed to him by the firm in form of a loan. Right. Then order number 3, paying to each partner ratably what is due from the firm to him in respect of capital. So it means after dissolution, the remaining or the amount of capital left must be paid to the partners in full. Right. Then the ultimate residue, if any, to be divided amongst the partners in the proportion in which profits are divided. Right. So in simple terms, all liabilities, all debts of the partnership must be paid before any closure. In simple terms, all the assets of the business must be disposed, and the gains or the losses that may arise from the disposal of such assets must be used to cover for any deficiencies of capital, must be used to cover the debts of the partnership, and the residue or the remaining profits or the remaining amount would then be divided and shared to the partners in their profit and loss sharing ratios. So these protocols must be observed first for a partnership to be closed. I hope you are listening and getting me, class. Right. So I have extracted a question from Cambridge, November 2013, paper 4.1, problem solving, supplementary topics. So would like to touch a question extracted from that paper. I want you to stay tuned. I'm going to come back and teach you what or the accounts to be prepared when partnership dissolution takes place. So stay tuned. Welcome back to the next segment. Right. The question reads, Dilip, Ephraim, and Fonzie have been in partnership for many years, preparing accounts to 30 June and sharing profits and losses in the ratio 3:2:1. Due to declining profits, they decided to dissolve the partnership on 30 June 2013. So we are given the statement of financial position as at 30 June 2013, showing us the non-current assets, current assets, total assets, capital, and the current accounts. We are now moving on to additional information. The terms of the dissolution were as follows. Number 1, the land and buildings were sold for 10% above their net book value. Fixtures and fittings realized 80% of their net book value. Number 2, Ephraim took over a motor vehicle at an agreed valuation of 10,000 Fonzie took over a motor vehicle at an agreed valuation of 7.5. The other vehicles realized 18,500. Number 3, the inventories realized 21,000. Number 4, trade receivables raised 15,750, whilst the partners were able to settle trade payables in full for 12,500. The dissolution cost totaled 3,450. Number 6, the partners closed the business bank account by drawing the balances due to them after the above took place. Then we move on to the requirement of the question. You are required to prepare the realization account, 14 marks. Remember, the realization account is also known as the dissolution account or the liquidation account. Part B, prepare the bank account, 10 marks. Part C, prepare the partner's capital account, 10 marks. Then part D, we are giving a theory. State 3 other reasons why partnership may be dissolved, of which we have mentioned that earlier in our introduction. Right. So I want you to take your notebook and get prepared as I'm going to lead you in the calculations or in the preparations of the ledger accounts. I'm going to start with the realization account, right? Realization account is very simple, right? We can split it or demarcate it into 4 headings. So on your debt side, you have assets at net book value, where net book value represents the assets at balance sheet values or balance sheet figures, right? Then we have payments below the assets and net book value, right? Then on our credit side, we have liabilities on top. Then another heading representing receipts and takeovers, right? Takeovers, they represents the assets taken over by partners. The assets not sold, but the assets taken over by partners, we refer to them as takeovers. Right, so we move on to the statement of financial position to identify the assets at net book value. Right, so the first asset at net book value that we have are land and buildings, right, amounting to 195,000. So I'm going to record land and buildings on the debt side of the realization account under the heading assets at net book value. Right, then we move on to motor vehicles, right? The net book value for motor vehicles is 43,750. So I'm also going to write motor vehicles and enter 43,750 just below the land and buildings. Fixtures and fittings have got a net book value 32,645. So I'm going to place 32,645 under motor vehicles. We are now moving on to current assets, right? On current assets, we are going to record inventories. So inventories are amounting to 29,875. I am now moving on to trade receivables. Trade receivables have got an amount of 19,765. Right. So below the inventories, I'm going to write trade receivables and enter 19,765. Cash and cash equivalents, they represent the amount in the bank as well as the amount representing cash at hand. So cash at hand and the amount in the bank combined, we can call them cash and cash equivalents. Right. So we are going to prepare a bank account separately. Therefore, cash and cash equivalents are not recorded or are not going to be posted under the heading assets and net book value. But however, we are going to post cash and cash equivalents when we prepare the bank account, right? So we are through with the assets and net book value. I'm now moving on to the liabilities, right? So the first liability that we have are trade payables, right? So trade payables are amounting to 14,650, right? So under the heading of liabilities, I'm going to record trade payables 14,650. We also have bank interest accrual of 6,335. So I'm going to place 6,335 just below the trade payables. The last liability that we have is falling under non-current liabilities, which is the bank loan amounting to 100,000. So I'm going to record the bank loan of 100,000 just below the interest accrual. Let's take a short break. I want you to stay tuned. When we come back, we'll be moving to another heading of payments. Welcome back to the third segment. We are now moving on to the settlement of liabilities. In compliance with Partnership Act, the partners or the partnership must settle off all its liabilities. So I'm going to start with the trade payables amounting to 14,650. Right. Looking at note number 4, it is written that partners were able to settle trade payables in full for 12,500. It means that they received a discount from its suppliers. So under the heading payments, I'm going to write bank semicolon trade payables 12,500. So payments are placed on the debit side to subtract the amount or to subtract the obligations on the credit side of the realization account. We are now moving on to interest accrual and bank loan. Nothing was mentioned about interest accrual and bank loan under additional information. But the fact that all liabilities must be paid off, it means that I am going to settle both interest accrual and bank loan using the balance sheet figures. So I'm going to write interest accrual 6,335 under payments. I'm also going to write the bank loan to record the payment of 100,000 to make sure that all liabilities are settled off. We are now moving on to dissolution cost. Right. Dissolution cost, it refers to the expenses incurred by the partners when closing down their business. Some of the partners, they don't even know how to prepare the realization account or the capital accounts. So people are hired to prepare those accounts on behalf of the partners. They charge fees for doing that particular task. Also, when dissolving the the partnership, there may be involvement of lawyers, which also needs to be paid. So the sum or the aggregate expenses, they are represented by the dissolution cost account. So dissolution cost is a payment which must be attached under the payment heading. So we move on to additional information number 5. It reads, dissolution cost totaled 3,450. Right. So under the payment heading, I'm going to write bank semicolon dissolution cost 3,450. So we are now through with the payments. Let's carry on to the receipts and takeover heading. Assets at net book value on the debt side of the realization account are going to be disposed of in two ways, right? It's either the partners are going to sell those assets, or some of the assets are going to be taken over by partners, right? So if the assets are sold, we have to attach the transaction with a bank account, right? But if the assets are taken over by partners, we write capital account, then attach the name of the partner, right? So I'm going to start with the land and buildings, right? Note number 1, it says that land and buildings are going to be sold at 10% above their net book value, right? So 195,000 plus 10%, right? It gives you 214,500. So under receipts and takeovers, I'm going to write bank, semicolon, land and buildings, then record 214,500. Fixtures and fittings were sold at 80% of their net book value. So 80% of net book value, it means that I'm going to multiply 80% times the net book value of fixtures and fittings, right? So the net book value of fixtures and fittings is 32,645. 32,645 times 80%, I'm going to get 26,116, right? So 26,116 is going to be recorded under receipts and takeovers, right? So I'm going to write bank, semicolon, fixtures and fittings, 26,116, right? Then we move on to note number 2. Ephraim took over a motor vehicle at an agreed valuation of 10,000. Fonzi took over a motor vehicle at a valuation of 7,500. The other vehicles realized 18,500. So like what I mentioned before, that when partners takes over fixed assets or current assets, right, we have to credit under the heading receipts and takeovers by writing capital account, attaching it with the name of the partner, right? So I'm going to write capital account Ephraim 10,000, capital account Fonzi 7,500 to record their takeovers, right? But the other or the remaining vehicles realize 18,500. So it means that the other or the remaining vehicles were not taken over, but they were sold. Hence, I'm going to write the detail bank, semicolon, motor vehicles, 18,500. Right. We are now moving on to note number 3. Right. The inventories realized 21,000. Right. It means that inventories or a stock were sold for 21,000. So I'm going to record bank, semicolon, inventories, 21,000. We are now moving on to note number 4. The trade receivables raised 15,750. Right. It means that customers were allowed discount by the partnership. Remember, under the heading assets and net book value, we had trade receivables amounting to 19,765. So, trade receivables settled their amount in full by paying 15,750. I'm going to record bank semicolon trade receivables under the heading receipts and takeovers so as to subtract the debt owed by the customers. So we are through in recording all those items under assets and net book values, under liabilities, under payments, and under receipts and takeovers, right? So the next thing to do after recording all of the items, you have to calculate profit or loss on realization. If the balancing figure comes, or if the balancing figures appears on the debt side, it means profit. However, if the balancing figure appears on the credit side, it means loss to partners. So if I add on the debt side, I get a total of 443,320, right? And if I add on the credit side, I get a total of 434,351. So it is clear that the debit totals are exceeding the credit totals by the difference of 8,969, right? So if the debit side is greater than the credit side, it means that the balancing figure is going to appear on the credit side. This is an indication of a loss, right? So this loss is shared to the partners in accordance to their profit and loss sharing ratios, right? So I'm going to write capital accounts because this is the detail that we use. The loss is going to be debited in the capital accounts. So I'm going to write capital accounts, Dilip, Ephraim, and Fonzie, right, on the credit side of the realization account to distribute the loss to the partners, right? So the profit and loss sharing ratio is 3:2:1. 3/6 times 8969, you get 4485. This is the loss incurred by Dilip. 2/6 times 8969, you get 2990, representing the loss incurred by Ephraim. Then we move on to Fonzie. 1/6 times 8969, you get 1494, right? So this is how you share the losses to the partners, and it brings to the end of the realization account, right? So I want you to stay tuned as we move on to the capital accounts. Welcome back to the fourth segment. In this segment, we'll be focusing on the preparation of the capital accounts, right? So I want to prepare the capital accounts in column form, whereby we'll be having 3 columns on the debt side and 3 columns on the credit side, since we have got 3 partners. So the number of columns are determined by the number of partners that we have. Right, so capital account has got a credit balance. So on the credit side, I'm going to start by balance brought forward or a balance brought down, right? So I'm going to look at the statement of financial position, right? The capital for Dilip, Ephraim, and Fonzie are 60,000, 50,000, and 4,000 respectively. So I'm going to credit the partners' capital accounts in the capital account. Right. The next thing is to record the current accounts. Right. So if the partnership dissolves, it means that the partners are no longer going to continue with the operations. Hence, the income of the partners in the current account is going to be attached to their capital account balances, right? So current accounts, they come in two forms. Current account can be a debit balance. Current account can be a credit balance. The credit current account is credited in the capital account. The debit current account is debited in the capital account, right? So debit current account is the one in brackets, right? And if the current account is not in brackets, it is an indication that the current accounts are representing credit balances. So looking at our statement of financial position, you can notice that Dilip and Ephraim's current accounts are credit balances. Why? Because they are not in brackets. So on the credit side of the capital account, I'm going to record the current account of Dilip and Ephraim. So under the column of Dilip, I'm going to put 33,865. Under the column of Ephraim, I'm going to put 24,910. Then the current account of funds, the one in bracket, is representing a debit current account. So I'm going to debit it in the capital account, right, under the column of funds. So I'm going to write 1,875 under the column of funds, right? So after recording the current accounts, you have to look at the realization account. Each and every entry in the realization account, return capital account, must be posted to the capital account in order to complete double entry, right? So the first entry to be recorded from the realization account are takeovers. Remember, Dilip and Ephraim took over motor vehicles at an agreed valuation of 10,000 and 7,500 respectively, right? And they were recorded on the credit side of the realization account. So to complete double entry, I'm going to post those takeovers on the debit side of the capital account. But I'm going to write motor vehicles as my details. So motor vehicles is the detail to be written on the debit side of the capital account. Then under the column of Ephraim, I'm going to put 10,000. Under the column of Fonzie, I'm going to put 7,500. Right. Then another entry in the realization account is the realization loss. The 89,669 that we have shared in the ratio 3:2:1. So the realization loss for Dilip was 4485, Ephraim 2,990, Fonzie 1,494. In order to complete the double entry, I'm also going to post them on the opposite side. So since the balancing figure for loss in the realization account appeared on the credit side, it means that when posting the realization loss in the capital account, you post on the opposite side, which is the debit side. So I'm going to write realization loss as my details. Then under Dilip, I'm going to record 4485. Under Ephraim, 2990. Under Fonzie, 1494. Right. So I have finished recording the entries from the realization account. Right. So according to going concern concept, balance CDs are only carried down when there is continuity of operations. So since the partners have dissolved the business, it means that in the capital account, we shall not have any balance CD. So any balancing figure that is going to come out from the capital account is going to be represented by the bank account, right? So if the balancing figure appears on the debit side, the meaning of that bank account is that the partners are being paid by the partnership what is due to them. But if the bank account or if the balancing figure appears on the credit side, it means that the partner was insolvent or the partner was bankrupt. Hence, that partner is obligated to pay what he or she owe to the partnership, right? So we have a situation where one of the partners who was insolvent was not even able to cover up for his or her bankrupt, the situation of Ghana versus Murray. So according to partnership agreement, it means that uh, other partners must pay, or other partners are liable to cover for the bankrupt or the insolvent of a partner who is not able to cover up for himself or herself. Right, but according to this question, um, there is no such a scenario. Right. So I'm going to start by comparing the debit side of DLIP with the credit side of DLIP. Right. So the total on the credit side is 93,865, which is the sum of 60,000 plus 33,865. Right. So I'm going to write 93,865 in both totals. Why? Because the credit side is greater than the debit side. Right. So it means that the balancing figure of DLIP is going to appear on the debit side, which is a favorable situation to DLIP. That DLIP is receiving from the partnership. Right. So 93,865 minus 4485, it gives you a balancing figure of 89,380, representing the bank or the amount of capital given to DLIP. Then we move on to Ephraim. We can also notice that the credit side is greater than the debt side. So 50,000 plus 24,910, it gives you 74,910. 74,910 minus 10,000 minus 2990, it gives you a balancing figure of 61,920, representing the amount given to DLIP. Then we move on to Fonzie. 40,000 is the bigger amount on the credit side. Also, it is going to appear in the totals since the credit side is greater than the debt side. So 40,000 minus 1875 minus 7,500 minus 1494, it gives you 29,131, which is the balancing figure for Fonzie. Right. So this is how you prepare the capital account. Right. And from the look of things, you can notice that it was a favorable situation for all the partners. They were receiving from the partnership what is due from them. Right. We want to move on to the last segment of today's lesson, which is the bank account. So I want you to stay tuned. Welcome to our last segment where we shall be focusing on the bank account, right? So, bank account is going to start with balance BD, and the balance BD, it depends whether the bank account is favorable or whether the bank account is an overdraft, right? So if you look at the statement of financial position, you can notice that cash and cash equivalents are appearing under the heading of current assets, which is an indication that the bank account is a favorable balance, which is the debt balance. But if the cash and cash equivalents was written under the heading of current liabilities, you have to place balance BD on the credit side, right? So I'm going to put balance BD on the debt side since the bank or the cash and cash equivalents are representing a favorable balance, right? So balance BD 6,850, right? Then I'm going to transfer all the payments and all the receipts in the realization account, right? Remember, each and every payment and each and every receipt, I was highlighting it with a detailed bank in the realization account, right? So I'm going to start with the payments, right? If you look in the realization account under the heading payments, right, you have trade payables, you have interest accrual, you have loan, as well as the dissolution costs. All those payments are going to be transferred on the credit side of the bank account, right? So on the credit side of the bank account, I'm going to write trade payables 12,500, interest accrual 6,335, loan 100,000, as well as the dissolution cost of 3,450, right? After recording the payments, I need to record the receipts. The receipts are on the credit side of the realization account under the heading receipts and payments. Each and every receipt is denoted by the detail bank, right? So the receipts are going to be debited in the bank account to complete double entry. So the first receipt that I have is land and buildings, 214,500. I'm also going to record fixtures and fittings, 26,116. We have got also motor vehicles amounting to 18,500. We have got inventories, 21,000, as well as trade receivables, 15,750. So these are the receipts that we have to be debited in the bank account, right? So after posting the entries from the realization account, right, we have to look in the capital account. Remember, in the capital account, the balancing figures were denoted by bank balances to represent the amounts paid to the partners, the amounts which were due to the partners, right? So those amounts, they represent cash outflow from the partnership. Since the money was being taken from the partnership to pay the partners, it represents cash outflow, right? So those balancing figures in the capital account, written bank account, are going to be posted on the credit side of the bank account to complete double entry, right? So I'm going to write capital account on the credit side, semicolon, Dilip, semicolon, Ephraim, semicolon, Fonzie. So I'm going to post 89,380 under Dilip. Then I'm going to post 61,920 under Ephraim. Then I'm going to post 21,131 under Fonzie. Right. So how do you know that you have done all the entries correctly? The bank account under dissolution, the bank account must balance both sides. So if you add the debt side, if you add the credit side, both totals, they must agree, right? The agreement of the two sides is a sign that you have done the entries correctly, right? So this brings to the end of today's lesson. I hope you enjoyed the lesson, right? So please do not forget to like my video. Do not forget to subscribe to my video. And I would appreciate even more if you share it to your friends, if you share it to your relatives, as well as colleagues at school, to like my YouTube channel, to subscribe to my YouTube channel. I hope you enjoyed. Have a nice day. Shalom.